Kirk Duckwell here with Mastermind the Market. Well, it's a normal summer. Okay, I've been saying things like normalization, not a crash. So what am I talking about? About normal summer. All right, let's dive into the data and take a look. All right, so when I was running the numbers for my showings per listing per week median sale price range, I saw something that I was kind of hoping for, which was a slight jump back up in the showings per listing after kind of the 4th of July weekend time frame. So we can see we're at a 3.89, drop to 3.79, and back up to a 4. If I go back to 2019, I can see it was at a 3.73, jumped back up to a 4.49, and then started to slow back down again. So if we kind of want to look into the future and see what's likely to happen now that we're seeing a more normal market, we can see that, it'll probably start to slow back down after that initial jump back up, but it'll be a slow descent. I'm going to kind of jump ahead a little bit to my market meter graph. So we were at a 5.77 on the market meter and dropped ever so slightly to a 5.75. And again, as I mentioned last week, we're not really in a crash, and this kind of shows that happening as to things are going to start to level out this time of year, which is common. Things slow down at a much slower pace, kind of in the middle to later part of the year. So we can see that is happening. 577 down to a 575. So where is that on the market meter? Again, kind of just jumping ahead here. Yeah, we're in the balanced market range, and that is normal for this time of year. All right, taking a look at some other data points out there. New listings into the marketplace did jump up a little bit week over week, was at a 1426 up to 1481. Pending sales continued to slide off, down from a 1250 to a 931. I wouldn't be surprised to see both of those numbers start to pick back up next week. Inventory of homes fell back a little bit, at 8291 to an 8123. So I want to focus on this for a minute. As I mentioned a couple minutes ago, that we are seeing things starting to flatten out or a slow down in the marketplace. The same thing happens with inventory at this time of year. So inventory typically peaks out somewhere between the end of July and the end of September, but holds kind of relatively stable during that period of time. So we're not going to see any massive movements typically during this time of year. I'm going to move on to home affordability. This is kind of an interesting point too. Home affordability for the first time in a while hit 100. So what does 100 mean? It means the median income earner has just enough money to qualify and buy for the median income home. Now, as we see prices start to slide back in the latter half of the year, again, which is normal, we'll see that home affordability probably tick back up unless we see movements in interest rates that go higher. Talking about interest rates, they did move up just a little bit week over week. So a 5.51 up to a 5.54 with points on a buy down there. Again, you want to talk to your loan officer if doing a buy down points makes sense. So that's buying that interest rate down to that 5.54. So if no points, standard interest rate right now, 5% down, 740 credit score, 5.625 on a 30-year, 5% on a 15-year, 7-year ARM at a 4.875, and a 10-year ARM at a 5.125. That from our resident mortgage geek, Chad Preby over at Bell Bank. So where are things going to go for the remainder of the summer? Well, again, we're likely to see just kind of things start to level off with a slight decline. And the only thing that will change that, like we've talked about in weeks past, is significant movement in interest rates. And with, looking at inflation predictions and stuff like that, I don't expect massive movements in home interest rates here over the next couple months, outside of maybe quarter point movements, at most half point. But again, if you've watched what's happened, it'll go up real quick and come back down. And these interest rates around 5.5, that's more normal than interest rates closer to 3. So everything we're seeing, as I've said in past videos, is more normalization in the marketplace. Hopefully you found this beneficial, especially if you're a buyer out there right now. It's a great time to get out there in this balanced market time frame with a lot more inventory. Yes, you could wait until things go into the buyer market, as they are likely to do when we go into the fall time frame, but you're going to have a lot less to choose from there than we see at this point in time. So sometime, if you want more choice, this time of year is really good, especially when the market's not as crazy as it was in the springtime. For sellers, it is a balanced market out there right now, so expect market times to be longer. If you had neighbors that sold in the spring and saw homes sell within 2 to 3 days, we are seeing average market times right now, kind of across all price points, at about 14 to 16 days. So hopefully you found that valuable. As always, check us out at TwinCitiesRealEstateShow.com if you want to geek out on more real estate, or you can catch us on the CW23 Saturday mornings at 6:30 or noon on Sundays on AM 950. Take care and have a great week.